I think it's also reflected, this point about the banker being creative and wanting to come up with solutions, by the regional principle, so that a savings bank, when there's a network of savings bank, each has their own geographically restricted area. So there is a limited space, and that creates also the right incentives. I mean, if you look at the UK, for example, and there's some deprived areas, and you want to set up a banking structure, the big banks would say, well, that's not an attractive area, we're not going there, and they pick and choose what suits them. But if you set up a network of geographically restricted local banks, there will be one for this deprived area. Now, what does the banker do? Well, they're in the same boat as the local community, so they have to think what exactly, as you say, what helps the local community, what can be done. Maybe getting involved with startups, attracting maybe some people to the area with ideas and so on. And this is the right incentive structure. So I think you're absolutely right. And of course, the other principle you're touching on is the principle of knowledge and trust, mutual trust. I mean, if you're in a small town and there is a local bank, the banker knows you, knows your parents, knows where you live, where your family lives. You know the banker and their children, and so on. So it goes both ways, because nobody wants to let down the other, and that creates, even though the risk may be higher, a stronger incentive for everyone to give their best to lead to a positive outcome for everyone. And that incentive is not there when you move to large-scale so-called transaction banking, anonymous, just look at the figures, don't care about people because it's big numbers, top-down in a big organization. You lose that trust and therefore also these incentives.
That's a different way of saying that, but we used to say that being local also means that you're long-sighted, you have a longer perspective. Because if you are banking in a local area, like a savings bank, and you will have a market to be banked against in 35 years, you must think about that. So every decision you take must hold for 35 years, hence be sustainable. So the time perspective is for us very important. And I think that's also, you Camilla were mentioning that it's not important of making profits, but what you can do with the profit. I also think that the time perspective is interesting in that phenomenon, because Swedish savings banks are making profit, but not necessarily for each quarter. It's not so urgent. It's a time frame matter. And when you add the time perspective into profit, that does not necessarily be bad. It can be also good profits.
Because of the way human nature works, I think small-scale local banking is more suited, because it brings things back to human scale. And then whenever you have these larger organizations, this is true of course in other industries, but in banking it's particularly dangerous, and you lose this human check and balances and the human scale. That's when you're in trouble.
I couldn't agree more. Unfortunately, the regulators and the Basel Committee, the Financial Stability Board, they don't know this yet. How shall we make them know?
Yes, and that's and I'm glad you raised that. That's a very important point. I mentioned that German savings banks are suffering a lot from that, and cooperative banks, because Brussels is stepping up pressure all the time, and the ECB, new bank regulations, Basel rules become European law without any democratic discussion immediately. So what's going on there? Well, what's going on is the big banks in Europe, they can afford hundreds, and in fact it seems to be thousands, of highly paid lobbyists who lobby, particularly in Brussels, those who draft the European regulations and directives.